you ever really stopped to think about what it takes to run a global airline? I mean, it's so much more complex than just booking a ticket online, right? Just think, in 2024 alone, Delta Airlines served over 200 million customers. That's just a massive number. It really highlights the incredible scale we're talking about here. So today, we're taking a deep dive into the skies and, well, beyond, really. Specifically into the financial flight path of a huge player, Delta Airlines. And we're using their 2024 annual report as our guide.
Yeah, exactly. Our mission, if you like, is to cut through all that dense data in the report, pull out the essential insights. We'll look at Delta's different business segments, their strategies for growth, how they did financially, and crucially, what it all means for the future of air travel, and hopefully for you too. Expect some surprising facts, maybe a few aha moments along the way.
Absolutely. So whether you're, prepping for a big meeting, maybe you're just really curious about the airline industry, or you just want to feel well-informed, this deep dive is definitely for you.
Yeah.
We'll unpack what's really important and why it matters. Okay, let's kick things off. Let's explore what actually makes up Delta's, well, empire. At its core, yes, it's global air transport, passengers, cargo, but they talk a lot about a commitment to making travel connected, personalized, and enjoyable. How do they actually try to deliver on that promise? It sounds good, but what's behind it?
Well, that's where it gets interesting. The report lays out these competitive advantages they believe support their brand, things like their people and the company culture, which they emphasize a lot. Then there's operational reliability, always a big deal for airlines, their global network, customer loyalty, and of course, a solid financial foundation. These aren't just buzzwords, they see them as real strategic pillars.
And that global network, that really is a game changer, isn't it?
Okay.
In 2024, they strategically increased flights at their core hubs, but also worked on efficiency in those key coastal hubs. And they really amplify their international reach through partnerships, right? Like with Aeromexico, Air France, KLM, Korean Air.
Exactly. That creates a significant presence in major hubs across Europe, Latin America, Asia. It's a truly vast footprint.
It affects millions of travelers every day.
That's right. And these aren't just like simple code shares. Many are deep commercial joint ventures. They often come with something called antitrust immunity from the U.S. Department of Transportation. This immunity, it basically lets Delta and its partners coordinate almost everything on those routes. Sales, marketing, pricing, even schedules. They operate almost like a single airline. It makes things smoother for passengers and way more efficient operationally.
That makes sense.
It is worth noting, though, the report does mention the pending renewal for their Aeromexico joint ventures immunity. It hit a snag, a tentative dismissal, back in January 2024. The immunity is still in effect for now, but it highlights how vital these agreements are.
Okay, so beyond the big international routes, they also have the regional operations, right? Delta Connection. How does that work? It's mostly contracts with other airlines.
Primarily, yes. They use what are called capacity purchase agreements. They have one with their own subsidiary, Endeavor Air, but also with Republic Airways and SkyWest. Essentially, Delta controls the schedule, the pricing, the ticket sales for these regional flights, and then they pay the regional carriers a fee based on operating costs. It's a way to feed traffic into their main network without operating all those smaller regional jets themselves.
Smart. And speaking of jets, their fleet, it's huge, nearly 1,300 aircraft, and they're updating it.
They are. It's a big focus, fleet modernization. In 2024, they took delivery of 38 new planes, more fuel-efficient ones like Airbus A321s, A220s, also some A330neos and A350s. And this isn't just about, shiny new planes. It's absolutely critical for their sustainability goals. Newer aircraft burn significantly less fuel, which means lower emissions and, frankly, lower costs.
Right, efficiency and environment going hand in hand there. And this focus on efficiency, it seems to tie into a broader strategy too, diversifying revenue beyond just selling tickets. They've really pushed these high-margin streams, like their premium products, Delta One, First Class, Premium Select, Comfort Plus. The report says yield growth there actually outpaced the main cabin in 2024.
That's a key trend. People are willing to pay for a better experience, and Delta's capitalizing on that. Record paid load factors in those premium cabins.
And then there's the American Express partnership.
Yeah.
That seems massive.
Oh, it's absolutely massive. You could almost call it a strategic linchpin. While many airlines rely heavily, almost solely, on ticket sales, Delta pulled in a staggering $7.4 billion in 2024 just from this co-brand card deal.
$7.4 billion.
Billion. Yeah, think about that. It's not just like bonus money. It's a remarkably stable, high margin revenue stream. It gives them a financial cushion that frankly few other airlines have, insulating them from the ups and downs of travel demand. And they project it growing even more, maybe hitting $10 billion long term. It's practically a cash machine that flies above the usual industry turbulence.
Wow. And that feeds right into their loyalty program, SkyMiles, doesn't it?
Directly. SkyMiles is a powerful loyalty engine. Members earn miles flying, using the card, other partners, then redeem for flights, upgrades, even donating miles. In 2024, something like 10% of all the miles flown on Delta were award travel. That's around 30 million award tickets. It just shows how valuable that program is for keeping customers engaged.
Okay, so premium seats, the Amex deal, loyalty. What else?
Well, there's Delta Tech Ops, that's their maintenance, repair, and overhaul division. It's a significant business in its own right. They service Delta's fleet, obviously, but they also have contracts with engine manufacturers for next-gen engines. It's positioned for growth. And then you have other pieces, like their cargo operations that brought in over $800 million in 2024, and Delta Vacations. Actually, MRO and Delta Vacations combined were close to $800 million in revenue, too. It shows a really deliberate diversification strategy.
And technology plays a big role too, right? They mentioned things like Delta Sync.
Yes, they view technology as a core differentiator. Investments in platforms like Delta Sync aim to improve the customer experience, boost operational efficiency, and allow for more personalized service. Making things smoother, more intuitive, it strengthens the brand, ultimately drives revenue.
Now, a really big topic these days, environmental sustainability. Seems like a major long-term push for Delta. They have this goal, net zero greenhouse gas emissions from airline operations by 2050. How are they tackling that? They break it down, don't they?
They do, into three main areas: what we fly, how we fly, and the fuel we use. So what we fly is largely about that fleet renewal we mentioned. Newer planes are just much more fuel efficient, around 28% better per seat mile than the older ones they replace. They're also retrofitting existing aircraft, putting new winglets on Boeing 737s, for example, saving millions of gallons of fuel each year. And they're looking further ahead, too. Things like feasibility studies for hydrogen fueling with partners like Airbus and Plug Power, even investing in eVTOL technology, those electric vertical takeoff and landing aircraft for maybe, down the line, home-to-airport travel.
Interesting. And how we fly, that sounds like operations.
Exactly.
Yeah.
Operational efficiencies. In 2024, they saved something like 44 million gallons of jet fuel compared to 2019 levels. That's through things like better flight routing, optimized landing procedures, even new engine cleaning techniques. They're also tackling waste, introducing new paper cups to cut down significantly on single-use plastics, and on the ground, installing preconditioned air units at hubs, using electricity instead of burning jet fuel while planes are at the gate.
Okay, and the last piece, the fuel we use. This seems like the toughest challenge.
It absolutely is.
Yeah.
Because roughly 90% of their carbon emissions come directly from burning jet fuel. So sustainable aviation fuel, or ASAF, is really central here. In 2024, Delta used over 14 million gallons of SAF. That sounds like a lot, but it's still a tiny fraction of their total fuel use. But it was 4 times what they used in 2023, so the trend is upward. They're trying to kickstart the market, making offtake agreements to guarantee purchases, investing in production hubs like one in Minnesota, and pushing hard for policy incentives to help scale up SAF production.
Because the challenges there are pretty significant.
Immense. Aviation is what they call a hard-to-abate sector. It's just inherently difficult to decarbonize. SAF production is tiny right now, and it's much more expensive than traditional jet fuel. It needs huge expansion, new tech, strong government support. Plus, they have to navigate complex environmental regulations, CORSIA internationally, the EU's emissions trading system, even local noise rules like at Amsterdam Schiphol. All these can add costs or constrain operations.
And just when you think you've covered all the angles, there's the refinery.
Ah, yes, Monroe Energy. It's genuinely surprising to many people that Delta owns an oil refinery near Philadelphia.
It produces something like 75% of their jet fuel needs.
Around that, yeah. Roughly 200,000 barrels per day. It's not just a quirky side business. It's a really strategic move. Vertical integration. It acts as a powerful built-in hedge against volatile fuel prices.
So while others are subject to the market swings,
Delta has a degree of cost control and predictability that's pretty unique in the industry. It's a real strategic advantage, a masterstroke, you might say.
okay, let's shift gears and unpack the numbers then. After all these strategies, partnerships, the refinery, how did it all translate financially in 2024 compared to 2023?
Well, the numbers show pretty solid growth, actually, despite some definite headwinds. Operating revenue was up, It climbed by over $3.5 billion, which is a 6% increase, taking them just over $61 billion for the year. A big driver was a matching 6% increase in their flight capacity. Demand was strong, both domestically and internationally, especially, as we mentioned, for those premium products. And they also got more revenue from the refinery selling to third parties.
Okay, revenue up 6%. What about costs?
Costs also rose pretty much in line, up 6% as well, to over $55.6 billion. The main reasons were higher employee costs, wages went up, and just the volume-related expenses tied to flying more. But there was one really significant event that hit the financials hard, that CrowdStrike IT outage back in July 2024.
Right, I remember that. Huge disruption.
Massive. It caused about 7,000 flight cancellations over 5 days. The direct financial hit was substantial, around $380 million in lost revenue and another $170 million in extra costs for things like compensating customers, handling crew logistics, and so on. Over $500 million, basically, from one incident.
Ouch. That's a huge impact. How did their unit cost look overall, and anything notable in non-operating results?
Their main unit cost measure, CSM cost per available seat mile, was pretty comparable to 2023. But if you look at CSMX, which excludes fuel to show core operational efficiency, that actually increased by 2.8%. And non-operating results saw a big swing. They went from a small income in 2023 to a $1.3 billion expense in 2024. The main reason was just the lack of those big mark-to-market gains on equity investments they'd seen the year before. Those didn't repeat.
Okay, this is where it gets really interesting, especially for investors, right?
Yeah.
How did Delta actually generate cash? And what did they do with it? Cash flow is critical for airlines.
Absolutely crucial. And they generated strong cash flow from operations, about $8 billion in 2024. Most of that came from, well, selling tickets, but also very significantly from selling SkyMiles to American Express. In fact, those cash sales of SkyMiles to Amex hit $7.4 billion in 2024. That's up 8% from 2023. It really highlights how vital that partnership is for their liquidity. It's a huge, growing cash source.
So they generate cash, but they also invest a lot, right? New planes, airport projects.
They do. Investing activities saw a net cash outflow of $3.7 billion. And the lion's share of that, about $5.1 billion, was capital expenditures, buying those new aircraft, paying for airport construction, things like that. Aligns with their modernization strategy. But even after those big investments, Delta generated $3.4 billion in free cash flow. That's basically the cash left over that's available for paying down debt or other corporate uses. And they finished the year with a healthy liquidity position, over $6 billion in cash and available credit.
So bringing it all together for shareholders,
Right.
How is Delta returning value?
Yeah.
Dividends, debt reduction.
Both, actually. They continued their quarterly dividend in 2024, started at 10 cents a share per quarter, then they bumped it up to 15 cents for the last 2 quarters. That totaled over $320 million paid up for the year. So a clear return to shareholders there.
And debt. Airlines often carry a lot of debt.
They do, and Delta's been actively working to reduce it. In 2024, they spent about $4.0 billion on debt and finance lease repayments. And importantly, about $1.1 billion of that was actually early repayments. They paid off parts of their SkyMiles term loan early, other notes, even bought some finance-leased aircraft early. The report explicitly says they continue to seek opportunities to prepay our debt during 2025 and beyond. The goal is clearly to cut interest costs and strengthen the balance sheet. They also did some minor share repurchasing related to employee awards, but the main focus seems to be dividends and debt reduction.
And just for context, the overall balance sheet snapshot at year-end 2024.
Yeah, total assets were over $75 billion, total liabilities around $60 billion. That leaves total stockholders' equity at just over $15 billion. It looks like a pretty solid financial position, especially considering everything the industry's been through.
So we've looked at the strategy, the operations, the finances. What does this all mean looking ahead? What does the report suggest are the big challenges and opportunities for Delta moving forward?
Well, looking forward, they plan to keep investing heavily. They expect around $5.0 billion in capital expenditures again in 2025, mostly for aircraft purchases, advance payments, plus more fleet modifications and tech upgrades. It really underscores their commitment to modernization and those long-term sustainability goals. It's not cheap, but they see it as essential.
And they feel confident about funding this.
Their outlook suggests, yes, they expect to cover near-term needs with cash on hand and operating cash flows, and longer-term needs through operations and, if needed, financing. But the report is also clear about the significant risks and challenges they face. It's inherent in the airline business.
Right, like intense competition. You've got the other big network carriers, point-to-point airlines, the ultra-low-cost guys. It's a tough market.
Absolutely. And fuel price volatility is always a major factor. Even though prices dipped a bit in 2024 versus 2023, geopolitical uncertainty means volatility is likely to continue. That figure is stark. A 1 cent increase per gallon means an estimated $40 million hit to their annual fuel bill. That really puts the refinery strategy and the push for SAF into perspective.
Definitely.
And speaking of SAF, its high costs and limited availability remain huge hurdles for their decarbonization plans. Cybersecurity is another ongoing threat. The CrowdStrike incident was a painful, real-world example of the potential disruption and financial cost. They stress continuous investment in cybersecurity, but the risk is always there.
What about regulation?
Always complex and evolving. Environmental rules like CORSIA, the EU ETS, potential regulations around PFAS chemicals, noise restrictions at airports, these can all increase costs or require significant investment. And then there are the broader factors. Economic conditions, air travel is very sensitive to downturns, geopolitical instability, trade issues. Even disease outbreaks remain a background concern. Labor relations, too, with about 20% of their workforce unionized, there's always potential for disruption if contract negotiations get difficult. And finally, just the basic seasonality of the business affects quarterly results.
So it sounds like a minefield of challenges, really. But Delta's strategy, focusing on diversification, customer experience, sustainability, that seems designed to navigate it.
That seems to be the plan. Resilience through diversification, especially that Amex revenue combined with heavy investment in the product, the fleet, and trying to get ahead on sustainability, they're clearly playing a long game, trying to manage the inherent turbulence of the industry. It's definitely more than just flying planes. It's a very complex financial and strategic balancing act.
So a key takeaway might be that Delta's really doubling down on controlling what they can control, like costs through the refinery and fleet, building loyalty, securing non-ticket revenue, while investing heavily to tackle the big future challenges like sustainability.
I think that's a fair summary. What really stands out is how they've built these diversified revenue streams, like the Amex deal, and how they're coupling that financial strength with major investments in technology and sustainability. It signals a serious commitment to long-term value, trying to build resilience against that industry volatility.
So as you think about your next flight, maybe consider how much goes into it beyond the ticket price. From the credit card you might use to the specific aircraft, maybe even the fuel coming from a refinery in Pennsylvania. It's this incredibly complex web. It makes you wonder what other industries might have similar hidden complexities and surprising diversifications if you really took a deep dive into how they operate. Something to think about. Well, thanks for joining us for this deep dive into Delta Airlines 2024 report. We hope you feel a little more informed and maybe even a bit more curious about the business behind the flight.